Welcome, everybody, to the High Return Real Estate Show. I got to tell you, I gave Jack the day off today. He actually is stuck on an airplane, but I get the pleasure of interviewing a very, very interesting man today. And he's a fellow podcaster, but he's in an unusual space in the real estate investing industry. And he's an expert in mobile home park investment. So I know what you're thinking. Okay, mobile homes, this is sort of the crappy low end stuff. And I'm going to really change your mind about this after we have a conversation with this guy. So stay tuned because we got a really great show for you. Welcome to the High Return Real Estate Show, the podcast for heavy hitters. Two men, one mission. It's time to build your empire. So welcome back, everybody. This is Jeff Schechter, aka Shecky, on the High Return Real Estate Show. And today I want to introduce a really fantastic guest. His name is Jefferson Lilly. And Jefferson is really an amazing dude. He's a self-made millionaire, but he is a mobile home park investment expert. He's an educator. He's a consultant. He owns a partnership that is worth over $32 million in value with 17 mobile home parks coast to coast. He's spent 7 years actually investing his own capital and learning the business from the inside out. Again, I think you heard me say that he's also a fellow podcaster, and we've got some interesting stuff to talk about there, but I am really excited to welcome you to the show. Welcome, Jefferson.
Jeff, it's great to be with you today. Thank you for having me. And looks like we got you some outdated information. We're now at 25 mobile home parks and over about 52 million in value.
Okay, well
we've been
awesome.
Busy.
Yeah, and that's awesome.
And
I'm happy to have you here. And I'm looking at your bio, and I'm also thinking I probably should have mentioned that you've got a BA from University of Pennsylvania, but also an MBA from Wharton, which is obviously you're going to get an MBA, that's the place to get it from. So clearly you're a guy that's got a little bit of business acumen, and I hope that after this conversation we are going to dispel some myths and some misconceptions about what investors think about investing in mobile home parks. So I'm very excited to dive into that. And obviously the first thing is I want to learn a little bit about just sort of this evolution. Like, how does a guy go from Wharton to figuring out that he wants to get into mobile home parks in the first place? Because I wouldn't have even thought of that. And how do you get into that and then start developing that out to be this big, huge national investment company? Can you walk us through a little bit of the timeline?
Yes, happy to. And as I say, Jeff, when I woke up from the concussion, buying a mobile home park just seemed like a good idea. But seriously, so I came out of Wharton. I had no idea that I would be ever buying a mobile home park. I had no idea I'd be in real estate. I actually moved out here to the Bay Area and went to work for some high-tech startup companies, and actually spent just about 10 years working for 3 different startups and kind of rode the whole .com up, down, and sideways, and came out of that experience thinking, really, to the extent personal finance is ever black and white, it's not quite. But I figured basically Warren Buffett was right, and value investing broadly was going to be how I was going to invest my capital for the rest of my days. And I had already been a Berkshire Hathaway shareholder for a while. And I bought actually my first stock when I was 17. I won't tell you exactly how old I am, but that was back when you had to fill out a physical paper trade ticket, and my father had to sign that trade ticket because I was still a minor. So anyway, I've always been interested in investing. And so coming out of the .com boom and bust, I just started investing in value stocks, mostly, value stocks, not yet real estate. And after, 5 or 6 years, I started thinking, maybe I should diversify out of the stock market and buy some value real estate. I knew I wasn't going to find that in the San Francisco Bay Area, so I was online and looking in places like Lubbock, Texas, Peoria, Illinois, Ames, Iowa, just any place other than really sexy markets like San Francisco. And in looking for multifamily, I would find 99 apartment buildings, at an 8 cap, and then one trailer park, also known as a mobile home park, that would yield like an 11 cap. And for your listeners that may not know, that's obviously an unlevered return on your capital. And I thought, well, that's absurd. I'm not buying a friggin' trailer park. And I deleted the search results and searched again and again. And that's why I had to get hit over the head 5 times or 10 times with these sort of 1 in 100 multifamily investments that were yielding so much more money, probably 5 or 10 times before I finally thought, hey, I mean, it is multifamily, it is real estate, and if it really pays that much more money, why not buy it? Why not look into it? So I started looking into it. I kind of read every book I could find, tapes, built up an unofficial sort of advisory board of about 10 guys that all owned mobile home parks. And I started running deals by them and just say, what do you think? Thumbs up, thumbs down. And so having that group of mentors was also a great way to learn. But, and we'll get into this in the show, but basically pretty early on after digging into this niche, I figured out a couple of key things that make it a much better niche than buying apartment buildings or self-storage facilities or single family houses or Kentucky horse farms or kind of any other real estate niche. It kind of clicked that this is value investing. And it was also kind of interesting that a little before that Warren Buffett had bought Clayton Homes, which is the largest manufacturer of mobile homes. They did own some mobile home parks, which is my niche. But it was interesting to see just that Warren Buffett thought highly enough about the industry broadly that he spent a couple $1 billion buying a mobile home manufacturing company.
Yeah. So first of all, I want to just thanks for all that. That's amazing. And I want to just throw out some kudos because it's interesting to me that you're a guy that goes from a Wharton MBA, which is, I mean, let's face it, Jefferson, that's pretty snotty, right? And to go from that to looking at something so ridiculously unsexy, like a mobile home park, right?
Yes.
So kudos to you for doing that. Like I would give you big props for that. But the other thing I want to say that I want to give you props for is this combination of going out and assembling this mentorship group and finding other people within the mobile home park space that obviously were doing deals and being very, very successful and being able to associate yourself with other successful people in that space. And then again, obviously the education piece too, is, buying books and courses and learning, right? Obviously, it's a lot of people will buy stuff, but, clearly you've also applied what you've learned too. And so, that's a huge piece there. So I'm tipping my hat to you, even though we're just getting started here, but
Thank you.
I think that's really great. So you alluded to some things that you felt made this mobile home park space better than others. And I know I'm almost afraid to ask this because, obviously a lot of our listeners are, would-be customers of ours that are buying turnkey real estate, and so we're probably going to lose a few customers over this, but I still really want to do this deep dive and just hear this is like really interesting to me. How is this better? Why is it better?
Yeah.
What break things down for us.
Yeah. So a couple of things, where to start. So it is unsexy, which means not a lot of the smart money is investing in this niche. I think when people are chatting with their buddies, at their local country club or at their local gym, everybody is investing in apartment building syndications, or again, self-storage or other things. Very few people are going after this niche, not because it's unattractive, but simply because it is so small. Just not a lot of people can invest in it, and word hasn't really gotten out. So one of a couple things I'll cover is simply that nobody ever thinks of investing in it, and therefore, the prices are reasonable to start. Now let's dig into the operations of a park. The way we run our business is is that we generally don't own the individual mobile homes. We look for parks where the tenants already own their own mobile homes. The implications there are, first, that you've got a tenant that has risen up out of apartment dwelling or renting a single family house. They may not live in a house as nice as you and I live in, Jeff, but they own that mobile home. They have pride of ownership. That makes them right there a better tenant than any other renter. Also, because they own their own mobile home, they then are maintaining all those proverbial leaky toilets and leaky roofs. That's not on us. So our repair and maintenance budget, we estimate, is about a quarter of what it is for apartment building investors, maybe a third. It's dramatically lower. For anyone that's already invested in real estate, think through your repair and maintenance budget. Think about how much of that went into, again, the improvements, everything above the land, versus how little you probably spent on the land itself. You probably cut some grass and you have some plumbing and you fix some of the pipes in the ground. And if you're in the north, you do a little snow shoveling. That expense is about it for what you have to do to maintain land. We don't own the toilets and the roofs. So that's another benefit.
Yeah, that's fantastic. And I mean, I just get excited when I hear that, but I just, for clarity, I want to make sure that that the listeners understand exactly how this is sliced. So when you own a mobile home park, you are essentially renting the parking space, as it were, for the mobile home that
we're in the parking business.
Yeah.
That's
Which is another great model.
That's the key insight. Yeah. So we obviously have far more stable tenants than a literal parking lot where cars come and go every day. But effectively, that's our goal. So for instance, even when we buy a park and we do own some or occasionally all of the mobile homes, we'll put those out on rent to own agreements. We'll filter our customer base for people that want to be owners, at least of their home. They will indeed rent the land, but we're looking for folks that want to own their own house. And so again, we won't kick folks out that are renters that come with the property, but when they turn over, we'll only put our mobile homes out on rent to own agreements. So in the long run, which maybe means 5 years, maybe 7 years down the road, we're back to pretty much a parking lot business where we don't own. I guess we'll probably always own, 5% of the mobile homes just due to some turnover. But if we can get to 95% parking lot and only be 5%, apartment building or renting to own, that's a great big win to again, reduce our repair and maintenance budget. Another implication, another benefit here from having tenants that own their own home is that they're not very likely to move. They aren't going to move across the street because, the trailer park across the street has a $99 move-in special or a new swimming pool. Traditional apartment renters will move for a $99 move-in special and a new swimming pool. Our folks own their own mobile homes. It depends a little on what market you're in, but let's just say $4,000 to move a single wide mobile home. And you can roughly double that if we're talking about moving a double wide mobile home. So, if we bump rents from $250 to $275, 10%, not that we do that every year, but that might be an initial rent bump, especially for a park with below market rents. But our tenants are not going to say, oh, forget you, I'm going to spend $4,000 to move across the street to try and save $25 a month. Just doesn't happen. So our tenants are much more stable, both because, they're owners and those tend to be people with more stable jobs and more tied into the community. And again, those mobile homes tend not to move. And let me finish off with one other thing that makes this better than any other niche. It is now, I use the term illegal to build more mobile home parks. It's really sort of against zoning. pretty much every city and county nationwide over the last roughly 30 years has changed their zoning laws so that there cannot be any more mobile home parks built. That's phenomenal. You think about any other real estate niche, again, self-storage, apartments, shopping malls, they're always building more of those, at least in good times, they're always building more apartment buildings and more self-storage and what have you. Again, this is the only niche in real estate where the supply curve is actually fixed. Meanwhile, of course, the demand curve continues to grow outwards as population grows 1% a year. We think, although nobody has accurate data, but we think the supply curve is actually shrinking inward about 1% a year because mobile home parks do get redeveloped into sexy shopping malls and apartment buildings and other things. So our demand curve moves just the same as apartments and other residential real estate grows outwards about 1% a year. Our supply curve is shrinking inward about 1% a year. So you can imagine where those curves intersect, rent prices go ever higher. So the limited supply by law is another thing that makes this a phenomenally good business to buy into, let alone, of course, when you can buy into it with some leverage.
Yeah. So why do you think that the laws are being changed in such a way that they are not allowing any more of these? I mean, there's nothing illegal or wrong with mobile homes. I mean, it's definitely not sexy, but it's certainly a comfortable place to live.
Yeah. So we won't talk politics too much, but suffice it to say, government is getting bigger and more intrusive in our lives than it was 30 years ago. There are just more laws on the books in every city, every county.
Sure.
What I've seen happen is that, if you have the skills and the interest to run for office, say, again, even at your local small town, to be on the board of supervisors or whatever, that's typically somebody who's middle class or up. There aren't a lot of people who live in mobile home parks who say, hey, I've got the time and the interest and the skills to put together a political campaign and to get on my local town's, board of supervisors. So the people that are making the laws by and large are middle class and up, and they do tend to look down on mobile home parks. I've been to some of these meetings and, I've had people say nothing too brutal, but certainly some things that are kind of unkind about the mobile home park. Even people that moved in after my mobile home park was built. I'm not some ugly new neighbor that just sprung up. It's like you moved in 20 years. You knew the park was there after you bought your single family house right next door. Why are you complaining? We try and run our communities to be safe, to be clean. There have actually just recently been some academic studies done that have proved that mobile home parks do not create any more crime than the surrounding neighborhood, right? If a park is in a bad neighborhood, yeah, the park's going to be bad, but there's going to be just the same amount of crime outside the park as inside. And again, if it's in a particularly good, safer neighborhood, again, then the park is much better and safer, as is the neighborhood outside. But the perception is that these things, are full of guns, drugs, and prostitutes, which is not the case. But that's what the media portrays. And, whenever there is a drug bust in a trailer park, that's all over the news, So it gets a bad reputation undeservedly, and it's been really outlawed.
So you're saying that we need to remove the words trailer trash from our vernacular?
We do. Maybe the bottom 1% of mobile home parks, are full of trailer trash. But the bottom 1% of apartment buildings are going to be bad, and the bottom 1% of single family houses for rent are going to be bad. Most of our parks are full of very good, decent, hardworking folks. They're raising kids in our communities, or they might be, a retiree who's on a budget and needs an affordable place to live. But it never makes the news when, all the rent comes in on time and the lady down the street has just planted begonias in front of her mobile home and the kids over there are playing on their tricycles and life is good in the mobile home park, that's not newsworthy. But that's the reality, for 99% of parks, but that never makes the news.
Well, there's really very little good that makes the news, but that's a whole nother story.
That's true. That's
why I haven't turned my TV on in 20 years, but yeah, that's a whole nother.
And I just don't have a TV to turn on. So.
Perfect. Yeah, that's even better. So you also are, like myself, like to leverage technology. And I wanted to ask you the question, because you're doing some interesting things with managing these parks using technology. Can you tell us a little bit about that?
Yeah, so I live here in the San Francisco Bay Area. My closest property is Spokane, Washington, which I think is 600 miles away or something. And we own in, Wisconsin and Ohio and all the way over to New York and down to Florida. So none of my parks are like an easy, 1 hour drive for me to just get there if there's an emergency.
Right.
So what we do is all of our properties have an on-site manager. We have trained them, if in fact they don't already know, many of them have, but we will train them on like how to use Dropbox to upload files and photos. So for instance, if a trailer does, get abandoned, it does happen, they can go and photograph it. We can then decide how much of a, rehab we're going to do. Anyway, so for instance, using Dropbox is a big plus for us. Of course, we use email, we text a lot. We've then, about 2 years ago, we switched over to Rent Manager. Rent Manager is software developed for multifamily properties, really mostly apartment buildings, but it works for mobile home parks too. So that's how we track, who has paid and who has not. All of our managers have a check scanner, and they get the checks, and they can just sit there on the kitchen table of their mobile home. Most all of our managers live in our communities. They can just scan the checks one at a time. They don't need to go to the bank. We make it easy on them. And not only does that deposit the rent payment, it also automatically updates our accounting. So we know that, okay, lot 17 paid, lot 22 paid, but without the late fee, there's a little red, a little red alert there that they might still owe $40. Anyway, and then we have somebody at our headquarters. We do have office space. We have somebody at our headquarters that just tracks all of those roughly 2,000 tenants. That's how many we have now. So again, our managers are the first line of defense for making sure all the rent comes in. But we have our accounts receivable person who does nothing but then check up and make sure that the managers are accurate, and that anybody that isn't paying gets a late notice, and unfortunately sometimes an eviction. Anyway, so just having everybody be able to see how a property is doing financially at the property and also at our headquarters, that's a big plus. What gets measured gets done. So it's like, okay, here's somebody that hasn't paid in your community. You manager, go collect from them. So anyways, I can't say that nothing slips through the cracks, but nothing much slips through the cracks. And so technology has been a big, big plus for us.
Yeah, that's great. I mean, it's real estate, so we all know it's not going to be perfect. It never is. All we can do is, build a situation where we can give ourselves the best odds of success. And, and I think that's great. So just from clarity, because we get into this conversation sometimes with some of our investors, if a mobile home park is, say, sitting in Florida, whatever state it's in, right? Do the same landlord-tenant laws apply to the mobile home park as if it were a fixed property with a full foundation?
Okay, great question. So if I'm the landlord and I own that mobile home and I'm renting it, which we tend not to do, but even if I'm renting to own it, then yes, it's basically just the same as an apartment or single family house rental, and we just do an eviction and it's pretty clean. If the tenant owns that mobile home, it gets more complex in some states, and then the way the states enforce their own laws varies. So basically, and I will say it's extremely rare that we ever have to evict anybody that owns their own mobile home, because our average lot rent is somewhere around $300. these folks are living, again, for $300 a month. They can beg, borrow, and steal to come up with $300. If we're renting to own a mobile home at more like $800, that's a bigger nut to come up with. And again, if they don't already own their home, they may not be as financially stable as somebody that does. But some states technically would make us, we can still do an eviction. Some states make us, to the letter of the law, then remove the mobile home out of the property, go put it on a storage lot somewhere, and then if they pay, then we bring it back into the park and hook it up again. That's obviously quite absurd and quite expensive, especially on the tenant, because the tenant has to pay that $4,000 move in and out. So again, it's happened very rarely that we have to evict folks that own their own home. It's typically older homes, and sometimes they'll just sign it over to us. The home might only be worth $1,000, and they'll just say, just take it. I can't make the $300 payment plus the late fees. And then we decide what to do with it, to renovate it, or perhaps to pull it out and bring in a new one. Anyway, so it can get a little complex when tenants own their own homes. But I don't even think the states that have that sort of crazy law really enforce a landlord pulling out a mobile home only to bring it back in a week later when the tenant pays.
So that's great. So let's illuminate things for the investors, because obviously that's the kind of people that listen to shows like this. So, so Joe, investors sitting out there in listener land right now. And
hi, Joe.
Hi, Joe. I know. I'm happy to have you here, Joe. And what are we going to tell Joe if he's got, say, I don't know, I'm just going to pull a number out of my you-know-what and just say he's got $50,000 liquid. And he wants to get into the mobile home game. How would you walk him through getting started?
Yeah, so basically you've got two options, as in a lot of real estate. You can either buy it, and learn it and do it and manage it yourself and put your own time and sweat equity into it. Or you can be a passive investor, settle for somewhat lower returns, but have all your time back, and invest in a fund like one of ours at Park Street Partners. They want to do it themselves, that's fine. One of the neat things about this business is that you can get into the business for relatively little money. I know a guy who started, I think, with something under $5,000, let alone $50,000. He actually bought a mobile home, renovated the mobile home. He was working with the park owner. I think he got a couple months rent free, and he then, again, fixed up the home, sold it. He created a rental income stream for himself. Plus, of course, the tenant now has to pay the lot rent to the landlord. So it's a great win-win. I think he did something like 50 of those deals before he bought his first mobile home park. So for folks with really small amounts of capital, you can get into it by owning the homes themselves. Although for all the maintenance reasons we touched on earlier, I just think it's too much work and I wouldn't generally advise that. But again, if you can find a landlord that'll work with you, it can work. So really the way to go is probably then, if you've got 50 grand, to buy some smaller park. There won't be a lot of bigger buyers like us going after a park. If you got 50 grand down, that's probably a $200,000 park. You borrow 150, you put 50 down. There won't be a lot of buyers for a park that small. So if you can get smart about the business, and we've got some resources on our website to help folks do that. If you can get smart about the business, then sure, you can go ahead and look around, find some smaller park, especially one that may have some upside, not only in bumping rents to fair market, but a park may also come with some unrenovated mobile homes. And then maybe for $3 to $5 grand additional, you get a house fixed up, and all of a sudden it's generating $600-700 a month in additional rents for you. So if you're willing to really roll up your sleeves, and get dirty, as it were, you can certainly get into this business for 50 grand down. I know a guy who got in for, I think, more like 10 grand down, and the seller carried the note. Can be hard to find small dollar loans from banks, but if you can get a motivated mobile home park seller to let you put down 10 grand or 50 grand, they carry back the rest. That can be a great win-win.
Well, two of my favorite words in the whole universe are motivated seller.
Yes, indeed. Yeah, you
Yeah.
got to figure out who the motivated sellers are and who are just sort of tire kickers to see if you're the idiot who will way overpay for the park. So,
Right.
yeah,
Yeah, exactly. Now you did touched on your investment group.
yeah,
And one of the things that I find fascinating as a fellow podcaster is that you have somehow leveraged your podcast to create some deal flow, cash flow. And, look, I'm going to be transparent too. We get plenty of deals as a result of putting out great information about investing on our
yep,
podcast as well. So I
yep.
understand how that can work, but I'm kind of curious. You've done some really big numbers off of that podcast, and bro, I want to
Yep.
learn from you. Like, tell me what happened. Like, how did you make this happen?
Yeah, so I wish I could say I had some grand plan or that this was some trick I learned at Wharton. I just honestly stumbled into it. I had somebody tell me that actually the folks over at Bigger Pockets were looking to do a podcast on mobile home parks. Somebody told me. I sort of reached out to them and said, hey, let me, I'm the guy for your show. Then, so I was on their show. Then somebody else recruited me, heard me. They're actually, as you know, but our listeners may not, there are sort of podcast talent agents, booking agents. So I got contacted by one of these booking agents to be on somebody else's show. And after getting hit over the head then twice being on other people's show, it then finally dawned on me that maybe I should have my own show. So
Yeah.
we started Mobile Home Park Investors. We were the world's first podcast dedicated just to this niche of investing in mobile home parks. We run now about 17,000 downloads a month. And it's kind of taken on a life of its own. I'm on other people's show and people hear about it. Our show has, is hitting fairly high in the Google search results. So it's just kind of happened organically. We haven't really been buying keywords or doing any such more formulaic structured marketing. It just kind of grows on its own. And pretty much every week somebody reaches out and says, hey, I've heard your show. I might want to invest in your next fund, which is great. We've also had a little bit of deal flow. We bought a wonderful property that's in Raleigh, Durham, North Carolina. It's 15 minutes from Duke, 15 minutes from Chapel Hill. That came to us from some listeners that just, thought it was a great niche, knew the park was coming up for sale, but wasn't being listed. And they just called us and said, hey, you want to pay us a referral fee? And we said, sure. So I think we paid them almost $75,000 for that referral to that great off-market park. Anyways, that's kind of why we do the podcast. I think it's the right thing to give back. There were a lot of people, as I mentioned earlier, that invested in me. I can't pay them back, but I can pay it forward. But it is also nice that I do get something out of it. Frankly, I get investors and mostly investors, but a little bit of deal flow as well from our Mobile Home Park Investors show.
Yeah, I think it's great. Within the world of just real estate investing, and I have a pretty strong background in digital marketing, and the last 10 years, it just seems like there's really been a lot of cream that has risen to the top. So for every, let's just say, charlatan that's out there and everybody hawking stuff and being hypey and over hypey and all that kind of stuff, there is a general groundswell of real business people and investors that are all about just mentorship and, like, to use your words, paying it forward. And same thing with Jack and I, when we put it out there, I mean, we know we can advertise and we know we can have people come to our site and they have a very positive experience on our site. But there's just something about doing the podcast, and now we're starting to record these and put the videos up on our YouTube channel. And it's like, it just puts a lot of goodwill out there. But it's because we're in this age of social media, like it's just a great way to get a lot of great information out there to people that they otherwise may not be able to have it or find it. And I think that just creates a good energy. Karmically, it's really good. Let's just say that.
Karmically, I like that word.
Yeah, I just made it up. So
okay, great.
Yeah, so anyway, so we're kind of getting short on time, but I see there's one question that I'm just kind of really wanting to ask, because it's really where the investor's mindset and where their head is
Yeah.
how the heck do you retire fast, right? So,
Yeah.
walk us through that scenario. Like, you've got something that you sent to me before the podcast about, you've got this formula that you can show somebody how to retire in 10 years, right? So I want to just lay it out. Tell us how to do it. Don't charge us for it. Give it to us for free.
Yeah. Okay, great. Fair enough. So, if you're sort of 50 something and you're kind of looking to retire in 10 years, and let's say you got 50 grand to your name, you're not going to make it if you just put it in the stock market or bonds and you sort of collect low single digit returns. You're going to, get back a couple thousand a year in income. Can't really live on that.
Right.
If you've got 50 grand, you can buy, as we alluded earlier, you can buy a more modest mobile home park. Say for 200 grand, you put down 50, you borrow 150. If you can live, say, for 10 years without taking any cash out, which is what you'd typically be doing in a retirement fund, you should be able to pay off that loan if you just take all the profits and put it back in to paying off the loan. You can own that free and clear in a decade. That's entirely reasonable. If you've got some improvements that you can do to the park, especially if you're handy enough to hang some sheetrock and paint and whatnot, you can improve a park and get some additional mobile homes that come with the park but aren't generating cash flow. You can get those rented out, start generating cash flow. It wouldn't be at all unusual that in 10 years you'd have 25 grand in cash flow, and if you really work it and have some improvements in the park, that park may be cash flowing 50,000 a year by then. Now you will have only put in 50, so you're not, 50,000 is a retirement. You're not going to live like a Rockefeller and be flying around the world on a private jet. But 10 years down the road, that's a much brighter financial retirement than saying, oh, I've got some bonds and some AAA rated stocks, and I collect 2 grand, 3 grand a year in dividends. You should have at least 25 and perhaps more like 50 grand coming back. If you want to lever up along the way, you can probably do better, because probably after improving a park, say 2-3 years into it, you should have created enough value that you can actually borrow back out your 50,000, right? You take a park that was worth 200,000 and you take it's not inconceivable at all that you could get it to be worth 300 grand, and now borrowing out 75% of that value is what, 225. Yeah, so you can pull out more than your initial investment and buy another park and do the same thing. So over 10 years, you won't quite have them all paid off at the end of 10 years, but you will have more cash flow. If you borrow out your equity every, say, 3 years and you stack it, then basically at the end of 10 years, you'd own your first park, plus you might own 3 others. You might own 4 mobile home parks. They won't all be paid off. But then you'd be getting more than 50 grand in cash flow, almost certainly. So it's just kind of a question of, how hard you're willing to work, and how comfortable you are thinking outside the box. That this isn't a normal asset class to invest in. But again, especially for smaller parks, the sort of $1, $2, $3, $4, even $500,000 parks, there just aren't a lot of buyers. And if you're willing to put some sweat equity into it, you can do quite well, and you shouldn't have any trouble retiring in 10 years if you're starting with, say, 50 grand today. But who knows, you can start with 0 and do that deal, and just get into the individual mobile homes and renovate that, like my other friend did, get up to 50 mobile homes and then buy a park. Anyway, so there's a very easy on-ramp into this business. You don't have to have a lot of capital to get started. You do need to be educated. It's a quirky niche. There's some moving parts. The homes literally can move. Sure. But if you get educated about it and are willing to work, there really shouldn't be any problem having at least a decent retirement 10 years down the road.
So this is great. Thank you for making the unsexy sexy again.
I don't know if I've quite done that. The properties still visually aren't sexy, but the profit and loss statements are sexy, and that's what's important to me. It's not owning a gleaming office tower or apartment building for me.
Oh yeah, I mean when Jack and I look at stuff, and we have investors that we're talking to about our stuff, sexiest thing is the ROI. I mean that's That's what gets everybody's attention. So, I mean, I think if they're real investors, I mean, I think there are many, when I say not real investors, is they can get diluted into some of the other sexiness. And this was actually absolutely one of the reasons why we wanted to have you on the show, is to say, look, you know, there's opportunity everywhere. And just because it's not all the tall, pretty glass doesn't mean that there's not some real significant returns to be made and real opportunity to change your lifestyle. So it's great. I really want to thank you a lot for that. So how can listeners find you? What's the best way to reach you if they want to learn more about what you guys are up to?
Sure. So a couple of ways. Our partnership and our website is parkstreetpartners.com. We've got resources there for folks, both who might want to buy a park directly themselves and or folks who might want to own a park in partnership with us by investing in one of our funds. Then we've also got our podcast and a LinkedIn group, I think almost 5,000 people now in the group, the biggest of its kind. They can find that by going to mobilehomeparkinvestors.com. That will link them into our community. Again, the podcast, the LinkedIn group, and actually the calendar. We have the industry's first, and I think so far only, industry calendar, so you can download upcoming mobile home park trade shows right into your calendar on your phone or your computer. Some of the upcoming earnings calls from the 3 publicly traded REITs that specialize in mobile home parks and other calls and information. So again, the LinkedIn group, the podcast, and the calendar are all there at mobilehomeparkinvestors.com. Okay,
and obviously we will make sure to put those links into the show notes, and so people can find them very, very easily. Well, Jefferson, great job, man. It's great to connect with you and to hear all your insights, and love what you're up to. And just want to say thank you. I really, really appreciate you coming on the show and sharing your wisdom with us.
It's been great to be with you, Jeff. Thanks for having me.
Yeah, thank you. Thanks everybody for listening. We'll talk to you soon.